Joining us is Greg Daco. He is the chief economist at EY-Parthenon. Greg, like how Democrats, independents, and Republicans answered was different. Democrats were super negative, independents were more negative, and Republicans were more positive. I mean, when did data get so political? So does it render the data moot?
Well, I think generally speaking, the University of Michigan Consumer Sentiment Index has always had this partisan divide depending on who is in the administration. But I think the main message that we're getting from these sentiment gauges, whether it's consumer sentiment gauges, business sentiment gauges, is that there is a lot of drag from the uncertainty from trade policy, from the tariffs themselves, and from fear of an erosion of incomes as a result of higher inflationary pressures. That's really what these indices are showing us. They're showing us that consumers are anticipating much higher inflation in the coming months, that this will reduce their ability to spend, and that as a result, we're likely to see a slowdown in economic activity.
Okay, because of the big drop when the current guy in the White House got elected, it's like some people are just saying the economy is going to stink because of who won. Other people are going to say, oh, the economy is going to be great because of who won. So again, what do we read from that? I mean, it's just bizarre. Like, I'm not saying that it's not worth hitting the data, because we are, but when I see that kind of a variance in political party representation, I just want to, like, burn the data. It doesn't matter anymore.
Well, we can't burn the data, Brian, but we can use it and be careful about how we use it. And I think that's very important in the current context. I tend to look at the independents view with regards to inflation expectations. They're the ones that have been rising consistently, and they're the ones that are essentially reflecting this anticipation of higher prices as a result of tariffs. I think if you scan across the horizon in terms of economic data, you have this ongoing tension between the soft data, the consumer sentiment data, the business sentiment data, that is pointing towards a slowdown in economic activity, yet the hard data is not really showing that. But if you lift under the hood a little bit, you're going to start to see the initial disruptions from the tariffs. You're seeing that on the goods price front in terms of CPI and PPI data, even if you're seeing some margin compression to offset the higher input costs. You're seeing that in retail sales, where some retail sectors where there was a front loading of demand led to essentially a pullback in the month of April. But it's not broad-based yet. We're going to see that data in the coming months, and it's going to take some time to be reflected in official data releases.
And we shall see, and hopefully the data will be a little bit less political than this report clearly and obviously is. Greg Daco, EY-Parthenon, thank you.